Core Scientific has secured 1.3 gigawatts of contracted power capacity. The question, can CoreWeave anchored AI hosting and 2024-2025 results validate its pivot? Core Scientific filed for Chapter 11 in December 2022 after Bitcoin price declines and rising power costs made mining operations financially unsustainable. The company emerged from Chapter 11 in January 2024 and resumed trading as a reorganized public company. In full year 2024, Core Scientific generated $510.7 million revenue, $408.7 million self-mining, $77.6 million hosted mining, and $24.4 million HPC hosting. Operationally, Core Scientific runs 9 data center campuses across 6 U.S. states, with additional development underway in Muskogee, Oklahoma. By mid-2024, operational infrastructure reached approximately 832 megawatts, up from about 724 to 745 megawatts in early 2024, largely from Denton expansion. In Q1 2025, total revenue was $79.5 million, $67.2 million self-mining, $3.8 million hosted mining, and $8.6 million colocation. In Q2 2025, revenue was $78.6 million, with $62.4 million from self-mining, $5.6 million hosted, and $10.6 million from colocation. Q3 2025 revenue reached $81.1 million, including $57.4 million self-mining, $8.7 million hosted mining, and $15 million from high-density colocation. Economically, despite the pivot, Bitcoin self-mining still contributed 71 to 85% of quarterly revenue from Q1 through Q3 2025. Here's the problem. The April 2024 Bitcoin halving cut block rewards 50%, driving a sharp self-mining revenue decline as power shifted toward AI and HPC workloads. In Q3 2025, gross margins were 26% for colocation, 23.1% for hosted mining, and 3.4% for self-mining, highlighting structurally higher profitability in AI and HPC hosting. Here's their position. Core Scientific holds 1.2 to 1.3 gigawatts of contracted power, planning roughly 900 megawatts for AI and HPC and about 400 megawatts for Bitcoin mining by 2027. The Denton, Texas campus is the flagship AI site, targeting approximately 260 megawatts of critical IT load for CoreWeave within access to about 394 megawatts of grid power. Core Scientific's AI and HPC strategy centers on anchor customer CoreWeave, with plans to deliver 250 megawatts of billable capacity by the end of 2025. At full build-out of roughly 590 megawatts for CoreWeave, Core Scientific expects an average of about $850 million in annual revenue over a 12-year contract term. Management targets approximately 75 to 80% gross margins on new AI and HPC colocation contracts, considerably higher than historical gross margins in the Bitcoin self-mining business. In Q2 2025, capital expenditures totaled $121.3 million, with $90.3 million funded by CoreWeave, primarily via credits against future hosting fees. By Q3 2025, capital expenditures rose to $244.5 million, including $196.4 million funded by CoreWeave through customer-funded infrastructure arrangements. Strategically, management has stated a goal of a relatively equal 2025 split between cryptocurrency-related and AI or HPC revenue, emphasizing longer-term contracted data center services over proprietary mining. Technically, Core Scientific's AI and HPC data centers support very high rack densities, typically around 50 to 200 plus kilowatts per rack, enabling GPU-dense deployments for customers like CoreWeave. Looking ahead, colocation and high-density colocation revenue has grown from $24.4 million in 2024 to an annualized run rate of approximately $60 million by Q3 2025, based on $15 million multiplied by 4. As of Q3 2025, trailing 12-month revenue from Q4 2024 through Q3 2025 was approximately $334 million, with trailing 12-month adjusted EBITDA of about $26.3 million. GAAP net income in 2025 has been highly volatile, including a net income benefit of approximately $580.7 million in Q1 2025 and a net loss impact of about $936.8 million in Q2 2025 from warrant and CVR revaluations. Economically, if CoreWeave capacity reaches 590 megawatts, Core Scientific expects about $850 million average annual revenue over 12 years, pursued alongside 75 to 80% gross margin targets on new AI and HPC colocation contracts. In other words, 2024-2025 data show Bitcoin self-mining still dominating revenue, but growing colocation, CoreWeave-funded capital expenditures, and disclosed AI and HPC margin targets collectively describe Core Scientific's evolving data center platform economics.